Good afternoon, ladies and gentlemen, and welcome to the Cornerstone FS PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet Company dashboard. Before we begin, if I may, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'll now like to hand you over to CEO James Hickman. Good afternoon, sir.
Good afternoon and thank you. So over this presentation, we plan to give a little bit of a history of the business for those who don't know Cornerstone, and really update on our 2022 numbers and some trajectory for the future and some of the strategic plans that we have. So without further ado, our mission to help businesses trade internationally. Now that's quite broad, but really, what do? We are a payments and currency services business to help businesses trading internationally and actually individuals as well, which we'll come on to. We serve our customers both online, over the phone, and actually in person for those that come to the office. And we have a team of expert account managers and currency exchange specialists that help companies manage their currency exposure. So the business has actually been going since 2010 in various guises. The original name, FX Press Payment Services, and the original business was developed on the premise of providing a technical service for other FX brokers. So as a technical service provider and regulated entity, we would allow other FX brokers to white label our services and ultimately resell it to their customers. On that journey, a fantastic platform was built. That was the obvious requirement for that business and that strategy. And plenty of money, time and effort was put into developing that. Over more recent times, there's since IPO, the strategy has changed. I've been on board since September 2022, so it's about 9 months. And really the business has moved away from servicing the white label market, predominantly two reasons. Firstly, the revenue opportunity. With a white label model, a lot of the revenue was taken by the white label partner, and really we got the minority share of that. And also the operational cost. It's very expensive to run a payments business. And obviously if you're not having the correct margins, then it doesn't really work out commercially. So we've really pivoted that strategy, and now we're trading directly. And so some of the key things that, particularly over 2022, which is where we are focused on at the moment, we acquired 2 businesses, Pangaea FX and Capital Currencies. We really acquired those businesses twofold. Firstly, obviously, increase our turnover revenue and customer base, but secondly, and slightly more importantly for me actually, was really to start building out our sales capability. Now, whilst we had a business with a fantastic technology and platform, what we didn't have is a sales capability, because ultimately we relied on other people to sell that platform. So in order to go for a direct sales approach, we need people. And those acquisitions really started and seeded that sales effort. And I'm pleased to say we've grown that, and the team is now growing. So the founder of Pangaea has come in and actually heads up our sales desk here, and that is actually growing outwards. And you can see from the numbers, and we'll come on to those later on, that's really working. I guess the other couple of notable things in 2021-22, the establishment of a Dubai office, and also an Asia team as well. So we'll come on to the specialism of the business later within the presentation, but they are significant because it differentiates us to other payments and FX businesses. And finally, although not in 2022, we did agree the sale of one of our e-money licenses, Avila House, to a company called Aspire Commerce. We also, and more importantly, actually, I think, which was a real endorsement for our platform, we've done a software licensing agreement with them. Now they're building out a different business model to us, but obviously after a lot of due diligence, they selected our platform because it fitted and was flexible enough to do what they want. So we were very, very, very pleased with that. Just a little bit of background on the leadership team. Myself, as I say, joined 9 months ago. My background very much is around payments and FX. I've been with a number of similar type of businesses previously, and payments actually is quite a complicated industry or complicated business. There are many different moving parts in it, and ultimately to have a successful payments business, you really do need the expertise. Similarly with Rob O'Brien, our chief, he's actually Chief Commercial Officer. He's based in Dubai, again, many years of experience. Judy sitting next to me here, a very experienced CFO. Obviously the financial side of things, very, very important. Bill's our CTO and CIO. I'm actually one of the founders of FX Press, so he knows the platform inside out and is absolutely integral in terms of, you know, building out our capability. And we'll come on to some of our partnerships and counterparty arrangements in a little bit. One of the things that certainly when I arrived, from a board perspective, it was plain that we needed to strengthen the experience on the board with a couple of hires. Both Simon and John. John Burns is ex-FCA. From a compliance point of view and a regulatory point of view, there is nothing he doesn't know. He is very, very well regarded within the industry, and we're extremely pleased to have him on board. And compliance and regulation is probably the most important thing within a business like this, and you absolutely have to get it right. Simon, a serial CFO with multiple PLCs, so a great mentor and guide. And finally, Gareth, who's been with the business some time, sort of from a guiding light point of view, absolutely invaluable, and from a governance point of view, really excellent. So we have a very, very strong board, which sets us in good stead. Just sort of running over the 2022 highlights. I'll let Judy talk about the numbers and the revenue, but an increase from 4.8 apologies, from 2.3 in 2021. Transacted payments volumes are up significantly as well, up 61%. I've mentioned the Capital Currencies and Pangaea FX acquisitions and the sale of Avila. Revenue diversification. Now, what that means within this business and within payments businesses is that it's currency pairing diversification, basically. Traditionally, UK brokers will have the majority of their revenue sterling to another currency. So in the main, you're quite reliant on the strength of sterling, or for whichever currency you have a reliance on. We've actively tried to diversify away from that to make sure that we've got multiple currency pairings from multiple directions. So what that means is that we're not impacted as significantly when a sterling or a particular currency is weak or strong. And it gives us a much clearer revenue profile. That is very much part of our Dubai and Asia drive, and again gives us a real USP in terms of delivering service to customers around the world. As I touched on, the business has had a real sales focus, particularly over the last sort of 9 months, and really trying to commercialize and sweat the asset, the technological asset that we built. The numbers, I think, speak for themselves in terms of that drive, and we fully expect that to continue. One of the things, again, a business like ours, and we're certainly not unique in this, is we rely and need counterparties and partners to expand our payment network. And one of the things that we're very much focused on over the next 12 months is expanding out our relationships in local geographical areas. So ultimately, rather than going out ourselves, which is very expensive and very time consuming, setting up all these arrangements locally, we're utilizing multiple counterparties. So we're selecting best of breed effectively, to ensure that our customers get the fastest, best value settlement in country that we possibly can. And driven by our API-led technology, that enables, from a customer point of view, they can select wherever they want currency to go to or be collected, and it means that it's predominantly a local collection, and that sort of flexibility and availability will continue to grow out. And the final bit I'd like to sort of touch on is the investment in people. We've got a fantastic team here, very highly skilled individuals, very experienced, and ultimately to give our customers the very, very best possible service, those people need continual development, and specific areas that we have invested in, and I'll come on to compliance and regulation in a minute, but that is one area that we've specifically highlighted. The other area is on the customer services and the currency sort of specialism. So to make sure that we can actually give the very, very best possible service to our business and to our consumer customers as well. And across the business, actually, there's a real desire. I guess this is maybe a little bit introverted, but there's a real desire to grow knowledge and improve, which is really, really good to see. So that's something, again, we're very much focused on. In terms of our growth strategy, so I've touched on most of these, but I would like to pull out a couple of them. And development and enhancement of products and services is really, really important. So what we don't have is sort of, we're not having a couple of boffins in a room thinking about things to do and then developing it. What we're listening to our customers and hearing what their pain points are, and then thinking about solutions and products that could help that. One of the biggest ones actually is lending, and a lot of our business customers particularly are saying, we love your service, we think everything else, but one of our pain points is lending. So we very recently launched a lending platform which effectively matches the appropriate lender to the customer. So it means that they don't have to fill in hundreds of forms with hundreds of different lending providers, only to be told no by most of them. It's one form, and it's effectively a lending dating site. We partnered with a company called Swoop, so we're not lending the money ourselves. That is the marketplace, and it's white label Cornerstone, and it gives a nice seamless journey to our customers. And in terms of our platform, the way we're developing it in terms of a overall financial services product, lending is very critical to that. We are growing our payment capability, as I say, adding more counterparties, more currencies in more jurisdictions. And our ultimate goal is to have where we can do, where it's not restricted, to have the entire globe covered by the end of 2024. We're doing strategic partnerships with local providers for instant settlement, and we're also adding, or going to be adding, other products and services or other payment rails, particularly on the card side. My background is very much on the cards, so looking to add card payments to the product portfolio as well. And there's many innovative solutions and new products coming online, particularly within the payments world, that allow things like card to account, account to card, and we want to give our customers as broad a choice as possible in the way they want to make payments and receive payments. So we'll be continually adding over the coming 18-24 months. The other key bit of the strategy is obviously growing our customer base, and how we're doing that is through a number of different strategies, one of which is a referring partner network. So by referring partner, I mean things like property companies who have a client who wants to buy property overseas. They refer them to us. Accountancy practices with businesses. So these are force multipliers that ultimately will generate a steady stream of introduced business, because they know their customer is being looked after with a high level of service. We're also improving our processes and procedures to allow us to onboard more customers from different sectors and jurisdictions. We're investing quite heavily in our compliance and regulatory capability. We very recently, we are in the process of putting in a new onboarding platform that will effectively allow us to straight through onboard customers in a compliant fashion, and this will give us increased bandwidth and also more protection and more oversight. We are looking at adding additional regulatory licenses, specifically Dubai. As you can imagine, we have people already on the ground there, and we are scoping that at the moment. And ultimately, in order to give this level of service across the globe, you know, over time, and in a cost-efficient manner, and again, I must stress, over time, we would like to add other people in other jurisdictions. So our target customers, I thought it's worth putting this slide in just to clarify exactly who our customers are. So we are talking to and service internationally trading businesses, and their turnover tends to be in excess of 5 million. And they have exchange or currency exchange requirements of over 100,000 per annum. We have a large book of high net worth individuals. And finally, as I mentioned before, introducers, or we classify them as affiliates, and those are people who are introducing those types of clients, so internationally trading businesses and individuals. So a mix of those, and ultimately our sales team and partnership team are actively growing those segments of that target customer base. And finally, for my bit, I thought it was good to visualize the platform as is and as it will be. Most of this, I feel now we've particularly over the past sort of 6 months accelerated quite significantly. The currency exchange obviously bit and international payments we cover, but we are expanding that capability. The automated back office and the API connectivity we're now built. So by API connectivity, what I mean is we can actually, or as a business who wants to connect to us and receive notifications, for example, of transactions, they can do that already. Or if they want to embed the payments capability within there, they potentially could do. The lending and borrowing facility with our partnership with Swoop, the intelligent compliance, again, as I can't reiterate this enough, the investment within our compliance team and our systems. The open banking we're actively looking at the moment, and the cards is very much as well on the horizon, and we're sort of targeting Q1 2024 for a launch of a card program, which again, this isn't replacing our current bank to bank. This is very much an additional rail with which customers can pay. So I'm going to hand you over to Judy now, who's going to run you through the numbers.
Thanks, James. For those that I haven't met before, my name is Judy Happer. I'm the CFO. I've actually been with Cornerstone for 2.5 years, so I've lived some of this journey that I'm about to talk about, and I can particularly talk to the kind of change in ethos that we've seen over the last 9 months since James has been on board. But I wanted to start with kind of outlining the fact that, you know, our financials really reflect that we're on an ongoing journey to profitability and cash generation through the execution of I'd say 3 levers. So the first being continued revenue growth. As you've already heard, we did 4.8 million revenue in 2022. That's a growth of 110%. The second lever being gross margin accretion, which has now been largely realised. So that's been driven by transitioning our customer base away from those kind of traded through white labels to the amount to those traded directly by us. That's resulted in a 9 percentage point improvement in our gross margin year over year to 61%. And the last lever is around strong cost control. So that's been evident really in our gross profit growth, really outpacing our cost control. So our adjusted costs. So in H2 2022, we had our costs increased by 21% compared to a 51% increase in gross profit. And I expect that to continue into the future with our revenue and gross profit growth outpacing our cost growth, meaning we have a very clear line of sight to both profitability and cash break even. Indeed, you will maybe recall that we recently released a Q1 trading update, and I'm pleased to say that we had our first quarter of EBITDA positivity, and we have a commitment that we will achieve cash break even during H2 2023, which for all of the reasons you've heard in this presentation, we look well on track for. Just to go a little bit more into detail on the revenue side, I've already mentioned 4.8 million, 110% year-over-year growth. That was really due in a large part to the continuing success of the Asia-focused sales team, which is really a USP for us, I would say. They came over to us in H2 2021, and you can see on the graph in the bottom left-hand side here, really that started to kick up the kind of sequential growth. And then you've already heard in 2022, we also added the tuck-in acquisitions of Capital Currencies in February and Pangaea FX in September. Even organically, we've demonstrated really good growth. So 89% was our growth rate without the 2022 acquisitions. And you can see in the graph a demonstration of that organic growth. H2 2022, a 54% increase on H1 2022. We've really sustained that growth into 2023, and I've got in the kind of a shaded bar here, Q1 revenue of 1.95 million, which again is over 100% growth versus the prior year. To talk about the gross margin, as I say, really we've been on a journey transitioning our customer base over the last 18 months, and you can really clearly see that in the graph here on the bottom left. So at the start of 2020, we had just 12% of our revenue coming from directly traded clients. In the last half, that is now up to 81%. And you can see the dramatic transformation of our gross margin as a result. Really, as I say, we started, and James has mentioned already, the business started by proving out the technology through white label partners. Probably no surprise that our gross margin back then was around 30%, because we would typically pay away 70 to 75% to our white label introducers. As I say, with the transition to mostly direct, we've seen a dramatic transition in our gross margin up to 61% for 2022. I'd say our level of direct business now is roughly stabilised. You can see that in the last three halves. However, we do have a little bit more to go in the gross margin, particularly as you might have seen in February, we announced a renegotiation of our deal with Robert O'Brien, who heads up the Asia team and the Dubai desk. He's now taking a different commission structure, which means we've probably got another couple of percentage points to come in the coming year. That, in addition to the fact that we've also rationalised a kind of a long tail of our white label partners, our legacy white label partners, those that didn't reach a profitability standard that we're going to adopt going forward with our white labels. They've also been transitioned out. So, as I say, largely realised, I'd call this theme, but with a couple of points still to go. The last thing I wanted to talk about is around our cost base. And really, the company previously invested in scaling up the management team, diversifying our counterparties, and also the incremental cost base of being a public company. I probably should also add investing in our technology, but that's largely capitalised. Over the last 9 months, I can certainly testify that we've been really focused on driving out the value, the inherent value of the platform that we've already built, and taking a really critical view on all our costs, which has resulted in some rationalisations being made, certainly within the board costs and corporate marketing and some other consulting fees. That's in addition to driving out the synergistic benefits of the companies that we've acquired. So rationalising their technology and partner and compliance costs with our own, which has allowed us to make some of those targeted investments, as James has mentioned, into the sales team, into smarter onboarding technology, so that we've been able to minimise the overall cost increase. As I've already mentioned, and you can see here on the bottom left, our adjusted cost increases has fallen way behind the gross profit and revenue increase. So I've already mentioned 54% increase in revenue in the second half of H2 of 2022 compared to 2021, compared to a 21% increase in costs. And just to give a little bit more detail on where those cost increases came from in 2022, it was largely driven by acquisitions. So 0.9 million coming from staff costs. That's really the full year cost of the Asia team, as well as the Capital Currencies and Pangea acquisitions. 0.2 million increase in rent and IT. Again, largely, I would say, driven by the rent-free periods we enjoyed in 2021 because of COVID, and a small increase in legal and professional. So, as I say, notwithstanding the tremendous growth on the top line, we've been really, really focused on keeping the costs within our target levels. One thing I did want to mention, kind of below adjusted EBITDA, because it's a big number and an exceptional one. During 2022, we incurred a 4.3 million share-based compensation charge, which makes our loss for the year look kind of horrible. So 0.9 million adjusted EBITDA transitioning to a 5.6 million loss for the year. That 4.3 million, I'm afraid to say, and don't shoot me any fellow accounting professionals out there, but really it's an accounting adjustment, doesn't necessarily reflect the true costs. So with the acqui-hire of Rob O'Brien and his team and the Asia team, we set in place a share incentivisation arrangement in August 2021. In August 2022, we renegotiated that deal such that we capped the settlement at 3.15 million, comprising 2 million of a loan note and 1.15 million of shares at 10 pence per share. Because of the settlement, we had to accelerate and recognise cumulatively all of the cost of the original estimate of the share-based incentivisation. There is a reserve transfer in the reserve note that will transfer that back between the share-based payment reserve and retained earnings. So I hope I kept everyone with me there, but as I say, I wanted to really just highlight our loss for the year has really been exasperated by this non-cash share-based payment charge. And then lastly, wanted to mention a few selected balance sheet items which emphasise, I guess, that since James has come on board, we've really focused on putting the business in the best possible footing, both from a commercial perspective that James has highlighted, and from some of those kind of legacy agreements and legacy assets, really. So we had cash at the end of 2022, sorry, 682,000. That's been improved after the year end with the realisation of the sale of Avila House, so the small EMI licence completed just a couple of weeks ago, giving us an additional £300,000. And for those that have been watching us for a while, you will be aware that this time last year we had a material uncertainty as to going concern. That's obviously reflected by the cash balance that we had then. Very pleased to say that with the continued efforts and support of our shareholder base, obviously as well, we have no such qualification this year, and with the other efforts, you'll see that we should be in a good position to stand on our own 2 feet with our existing cash resources, and so those other efforts are around the loan notes. So at the year end we had 2.25 million in loan notes, one of which has been converted post year end following the approval of Mark Horrocks becoming over a 10% shareholder by the FCA. 2 million of that related to Rob O'Brien, which has post year end, again, as we announced in February, been pushed out a further of a year. So now we're payable at the end of July 2026. So really giving us a really good runway to build up our cash reserves to make that payment. And then the last one, the deferred consideration reserve, that relates to the earnouts on capital currencies due for payment or settlement effectively in March 2024 and March 2025. Now we agreed to push that out by 1 year, and also gave the company the option to settle in cash. So previously that was a mix of equity and convertible loan notes. So again, a further action to really mitigate any future shareholder dilution. And with that, I'll hand back to James.
So I guess in summary, and we'll go through the questions in a minute, as a business, we're on solid footing. So we have revenue growth, costs are under control. We have an experienced team, which is absolutely vital in payments in a regulated entity. We are fully regulated, which actually is no mean feat nowadays. So e-money regulation from the FCA is very hard to come by. And as we've seen with our Avila House disposal, there is significant value there. We've got a very, very strong technology platform. The cost there is sunk, it's developed. Yes, there are enhancements, but ultimately it's now maintaining that technology and building and putting on partnerships alongside it. We're expanding our product set, which will ultimately drive more revenue as well. And finally, being EBITDA positive in Q1 and very optimistic for the full year, I think we've got a very, very bright future. So thank you, and we'll do questions, I think.
James, Judy, that's great. And thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Judy, James, as you can see in the Q&A tab, we have received a number of questions throughout your presentation this afternoon. And thank you to all of those on the call for taking the time to submit their questions. But James, Judy, if I may just hand back to you just to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Great. Do you want to take the first one, Judy?
The first one is the question reads: revenue of 4 million, operating expenses of 8 million, resulting in 5 million loss. What's the strategy and timelines to a profitable enterprise? So I think we've covered that in the presentation. As I say, a lot of that operating expenses, or the vast majority of that operating expense, is actually related to the non-cash share-based payment expense, and the underlying adjusted EBITDA loss was 0.9 million. We've already updated the market that we achieved EBITDA profitability in Q1 and are on track to deliver cash break even during H2 2023.
So next question. Upcoming year is going to be very challenging. Majority retail and real estate will be impacted in a negative way. Existing banking system starts to crumble. How is Cornerstone going to grow under such circumstances? In some ways, it's an opportunity for us. The banking crisis back in 2007, and there've been multiple. There's always seems to be a banking crisis. Ultimately, we're not reliant on the banks, and in fact, in some ways, the customers, when there is a banking crisis, do turn to alternative providers, and we are one of those alternative payment providers. In terms of sort of the real estate market, yes, absolutely. Certain areas of the world are impacted, but in terms of our diversification, that really is the point of the strategy. Is we are diversifying globally. Yes, there might be a downturn, but certain areas are more impacted than others, and that absolutely is why we diversify. Rather than having revenue just coming from one area of the globe. So for me, I think we're in a very, very good place to ride if there is a catastrophe. Obviously, no one can predict that. But in terms of looking forward to the future, I'm very, very optimistic that we can thrive in an economic downturn. What's this? I know expanding. So the next question: I know expanding the client offering has been keen in delivering increase in revenues. Do you have plans to enhance the customer offering further or enter into new verticals? Well, I think we sort of discussed a little bit about the product enhancement. So yeah, absolutely we do. And in terms of new verticals, you could argue that potentially the card vertical is new for us. The lending certainly is. In terms of geographical regions, yes. But again, I would stress that this is going to be very much done on a almost bootstrap basis. When we can afford, we will. We're not going out and spending everything on and gambling on one thing. It's very much by trial, see what works, what doesn't work, and we do it on a very controlled manner. Ultimately, utilising everyone within the business's experience, which ultimately helps and defer. Or I'm hoping that we'll with experience, we utilise people's learnings. So certainly from my side on the card, I sort of know what works, what doesn't work, who to work with, and that will set us in very good stead in terms of future product offerings and enhancements.
Okay, I'll read the next one, James, because it's actually for you again. Probably. James, since joining the business, has the progress to date met your expectations? What KPIs do you use to measure progress?
Good question. In a nutshell, yes. My KPI when I came into the business was very much, and I'm sure Judy will reiterate this, was very much around getting this business to cash positive and EBITDA positive. Without that, ultimately you don't really have a business and you don't really have a business model. Now, there are a lot of things we can do to create that, but in very simple terms, more sales, less costs. And that's very much what I've focused on in my first 9 months here. Now we're at that stage. We're now looking at other levers that we can pull to really take us to the next level and the next sort of step up, if you like. And that is product enhancement. That is increasing our sales capability and our geographic. So in terms of the KPIs now, it'll be very much on maintenance of margin and increasing where we can margin. Very much, as I mentioned, I really have this vision for 2023-24 of ensuring that we can operate or deliver and receive across the globe in any currency. And I think that's going to be absolutely vital. And it's really making sure that we're constantly increasing the number of currencies and the number of localities that we can service. So those really 2 key things for me.
Please can you break down how much of the 2022 revenue of 4.8 million relates to capital currencies and how much relates to Pangea FX? We have not disclosed by company or acquired customer base. However, I did mention that the year-over-year growth, excluding those acquisitions, was 89% on a revenue basis. The next question, the payment dates for the 2 tranches of deferred consideration for capital currencies are now March 24 and March 2025. Please confirm if you expect to be able to fully settle both tranches in cash. Obviously, I can't make forward-looking statements, but I can kind of refer you to our external analyst notes around our cash projections, and they would certainly indicate that we're able to settle both tranches in cash, and we were fairly happy with how those notes were positioned. The next question, please can you talk about key man risk, specifically the impact if either James or Rob were to leave the company?
Good question. And key man risk is something we constantly think about, and it's not just myself and Rob. There are a number of key people within the business. As I mentioned, we've got a lot of really, really good people in the business. For myself personally, obviously it's about incentivization, making sure that if this business is working well, everyone's incentivized that it's doing well, then that's all you can do really to protect. Rob obviously is a very large shareholder and is very much in his interest for this business to be successful. So I would say in terms of risk of him leaving, it is limited. But again, this business has got to succeed. People have got to be incentivized, and that's not just myself and Rob, but throughout the business. And we try and mitigate as much as we can do.
What impact will the introduction of the consumer duty regulation have on Cornerstone?
That is an excellent question. Consumer duty. Now, this is a big piece of regulation coming down at the end of, or implementation at the end of June from the FCA, that basically protects consumers and actually micro businesses, to ensure that every transaction and every touch point is a good outcome for them. Now, good outcome is unspecified currently, but in their guidance, what the FCA are looking to see is very much about service levels and value. Now, what they're not saying is, you need to be the cheapest and you need to be, give absolutely the best service. What they expect to see is value for service. Now, I think Cornerstone particularly is very well geared up for this because we're not app only or web only like many companies. We have a multi-service offering, so we do speak to and a lot of customers over the telephone, and in fact some in person that come to the office, as well as our platform. So in terms of meeting our obligations, I think we're very well set up to that. We've done a huge amount of work internally on the consumer duty piece. So I feel very, very confident as a business. We're very well prepared for this new regulation coming in June.
Yeah. I'll take this one. If only a small uplift from the Pangea sales team, why have so many shares been issued on this acquisition? I just wanted to clarify that there were no shares issued in respect of the acquisition. Share options were given to the two principals of Pangea that came across, so 550,000 each at a 10p strike price, which was above the market then and continues to be now. So they're really participating in the upside of their journey with Cornerstone. As James has already mentioned, that they're both heading up sales in respectively Dubai and the UK. So they're incentivized for the long term, actually more based on their performance within Cornerstone than the acquired book. So the acquired book is part of the loan notes figure, 175k roughly within the loan notes figure.
Blockchain technology, will it be in Cornerstone's pipeline? Again, good question. We have looked at blockchain and constantly look at it actually, and specifically around trade settlement, because there's definitely, in terms of the technology itself and validating transactions, it is really, really exciting. In order to transition to that type of technology, there is a big sea change in terms of our platform. So obviously that comes with costs, with time, etc., etc. Now, to be perfectly frank, the business is not in a situation where it can suddenly drop its technology or its current technology and move over to something else. I'd much rather focus on the sales and the revenue side of things, and whilst keeping an eye on it for sure, and possibly utilising third parties, our own internal technology certainly in the very short term will not move over or be developed with any blockchain technology behind it.
I'll take the next one. Will H2 be stronger than H1, and by what percentage? Well, that's a nice attempt to try and slip me up, but I can't answer that specifically. I would just draw your attention to the earlier revenue slide I presented, and mention all of the initiatives that James has given air to over the presentation. I think it's natural to expect on a growth trajectory H2 to be stronger. You again referring to the analyst coverage that's out there. They've got 6.5 million for the year in terms of an expectation on our revenue performance. So I think that kind of speaks for itself. Do you want to say this one?
Yeah. How do you see the growth over the next 5 years? How large could revenue become in that time? Wow. I mean, really, in terms of the revenue profile of the business, obviously we've got our margin, payments margin, but ultimately it will be very much dependent on other products and services that we add. So, for example, on a card scheme, we would not only benefit from FX, we would benefit from interchange. So actually, in my mind, and particularly with a global settlement network, revenue, certainly when we look back at 5 years from now, it will be a completely different business. I can't put a number on it, but ultimately it will be a totally different business, in my opinion.
I think we did that one enough.
Yeah, I mean, what are your priorities for 2023? My main priority continues to be making sure that the business trades EBITDA positive. And secondly is to ensure that our products and capabilities, particularly around the international settlement or payment settlement, that we fulfil our ambitions there. So those are the two key things that I'll be focused on. Fiat currency pair convert to stablecoin, CBDC at Cornerstone FS in future. If that refers to stablecoin conversion to fiat and vice versa, yes, I have looked at that actually. The difficulty with that is stablecoin, like other cryptocurrencies, does still, from a regulatory point of view and from a counterparty relationship point of view, prove a problem. So particularly with our banking partners, as soon as we put our head above the parapet and say cryptocurrency, people will run a mile. So whilst it's an interesting space, certainly our current client base, it's not something they're screaming about or demanding. It's something that we will keep an eye on, no doubt about that. And as it grows, and I do genuinely believe it will do, as well as other cryptocurrencies, not just stablecoins. We're certainly keeping an eye on it, but for the immediate future, and that's really what we're talking about here, it's sort of a watch and see brief.
James, Judy, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the Investor Meet Company platform. But James, perhaps before just redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Certainly, thank you. I'm hoping today that we've shared sort of an insight into the business, how excited we are about the future of this business, some of the things that are coming down for 2023, as well as what's been achieved in 2022. As I mentioned, we're very, very excited about the prospects and the future of this business. I think from a valuation point of view, in my opinion, as I would say this, obviously, I think the business is massively undervalued. I think, simply from a regulatory and license and a technology point of view, that there's huge value here, let alone the people, the current revenue, etc. So I think, hopefully you can get as excited as we are about the prospects and the journey, and hopefully you'll continue to follow.
James, Judy, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Cornerstone FS PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.